Hello and welcome. You're watching Business Today TV. This is Market Today and I'm Sakshi Batra. This is where we'll help you understand the latest cues from the D Street, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing in trade today. We'll also focus on two very important aspects that the markets are reacting to. One is the rising tensions between India and Canada, and amid which the focus is now shifting to the Canadian pension funds held stocks. They have exposure to at least 6 stocks in India, and all of them have come into focus. Most of them are also showing some declines right here. What could that mean for these particular stocks? What should be your investment strategy in these stocks then? We'll find out that. And second of all, the continuous fall in HDFC Bank for the third day in a row, the erosion in market cap, and of course after the analyst called released certain negative surprises after the merger has come in. What could be the impact on NIMs, on asset quality, and what should be your strategy on HDFC Bank as well? These two are the points on which we will focus in today's trading session. We'll get you expert views on that. But first up, a quick check on how the Nifty and the Sensex are doing at this point. Of course, after that sharp downtick yesterday, when we saw about an 800-point fall on the Sensex, you also have another 611-point cut right now on the Sensex at 66,185. The Nifty has not only given up 19,800, but it's also now trading at below 19,750, currently with a downtick of almost 0.8%, 170 points lower in trade right now. Below the surface, let's look at the broader markets, the mid and the small caps, even they have slipped in trade today. The small caps and the mid caps are down by 0.5% each. The Nifty Bank, where the heaviest weighted counters exist, the index is again under pressure today, led by losses in both private banks and the financial services space as well. The Nifty Bank is seeing a sharper fall of 1.3% in trade, so a deeper cut when compared to the benchmarks, the Nifty and the Sensex. Of course, apart from this, you're also seeing the oil and gas stocks decline in trade, consumer durables, metals. You also have several other stocks. In fact, all the sectoral indices that we track under the Nifty, barring the media index, they're all down and deep into the red today. Let's also look at what the Nifty losers look like at this point in time. The stocks that are seen falling the most again today are M&M, that's now down by over 3% odd. ICICI Bank, that's down by 2.2%. Grasim, SBI, IndusInd Bank, Cipla, these are the major movers on the downside as far as the Nifty is concerned. On the Nifty gainers front, again, you do have some stocks right there that is still holding up. Adani Ports, for example, is up by 2.2%. Tech Mahindra, BPCL, Adani Enterprises, UPL, these are the counters that are still holding up in trade. Now, of course, some of the PSU banking space stocks, the index was trading in the green right from the morning trade. Now it's come under pressure, but some stocks are still doing very well. Indian Overseas Bank, currently the top gainer on the Nifty 500 space, is up by about 6.5% right now. Bank of India, Indian Bank, these are the stocks that follow suit as well. Let's welcome our guest on the show. Mr. Kranti Patini joins in. He's the Director Research at Wealth Mill Securities. Welcome, Mr. Patini, and thank you so much for taking the time out for this discussion. First up, your view on the markets and the constant pressure that the benchmark indices are facing from the last 3 days in a row. And what does it really mean? And the key reasons, and could this correction deepen further?
Yes, Akshi. Good afternoon. Always a pleasure to share my views with the viewers of BT now, BT TV. Yes, actually, markets on a higher range from last 3 trading sessions during this week. We have witnessed some kind of profit booking that's taking place at the higher range. But today, the surprise is market is could able to violate the strong support zone, which we were thinking it's as a market should not violate the range of 19,800 and 19,750. These are the crucial support zones currently market has violated already. So some kind of shorts are getting opened at this point of time because the crucial support zone in the shorter term have violated. Some kind of selling pressure is accelerating at this point of time on the market. Reasons, the main reason is crude oil is slowly inching towards above $90. That's a key concern for the Indian markets at this point of time. Any kind of bullishness with respect to crude oil price going above $100 per barrel, definitely it is going to create some kind of negativity and pressure on inflation, and subsequently RBI measures towards the RBI monetary policy, and it accelerates the inflations by and large in a country like India, which is completely dependent upon crude oil imports. So the other hand, what we can see is some kind of these geopolitical issues, which we have been anchoring from quite a long time. These are the issues that creating the pressure on the markets at this point of time. But one thing to ponder, Sakshi, Indian markets, whenever markets gives a dip, it's a buy and dip market. Definitely at this point of time also, just it is just a small dip because markets have been rallying from quite a long time. Last fortnight, markets have rallied beautifully. Some kind of profit booking is expected. The sentiment is still on the favor of for positive side only at this point of time. The valuations also on a longer term basis, relatively, Indian markets looks compelling at this point of time. Nothing to worry. But any dip, these kind of knee-jerk reactions do come in the bull markets. So these kind of pullbacks, investors can use these pullbacks definitely to re-enter in the markets at this point of time. Definitely, Indian market is always a buy and dips market.
Okay, let's focus on the big piece of news, and that is the rising global tensions between India and Canada now. The relations have hit a new low recently over the last few days as Canadian Prime Minister Justin Trudeau alleged the involvement of India in the killing of Khalistan Tiger Force Chief Hardeep Singh Najjar. And after that, India issued warning against the anti-India activities in Canada, and of course has issued advisory to all the travelers, Indian travelers to Canada. Meanwhile, today again there's news coming in, reports suggesting that visas for Canadians wanting to travel to India have been suspended until further notice, and this is due to operational reasons. There is no official communication on this, but BLS International, which is a visa provider, has put out this as a scrolling notice on their Canadian website as well. Meanwhile, the concerns amidst the investors community is, if these tensions were to continue, then what could be the impact on the Indian stock markets? Now, there could be, of course, fears that trade investment could be hit, and a lot of stocks also where even Canada or Canadian pension funds have exposure to, they have already started to show some kinds of concerns as well. So there are two Canadian pension funds, CPPIB and CDPQ. These are the largest institutional investors which have exposure to Indian stocks and the unlisted companies as well. The Canadian Pension Plan Investment Board, or CPPIB, has made investments in several Indian companies. Data compiled from corporate database Ace Equity now suggests that at least 6 domestic stocks is where Canadian pension fund own about 1.5 to 6% stakes in these companies, and these are worth about 16,000 crore rupees as well. Let's talk about all of these stocks one by one, but first up I want to just take your view, Mr. Patini. How do you see the impact of the rising India-Canada tensions on the Indian stock markets? How should an average Indian investor really understand this impact?
Actually, one thing, there is a diplomatic logjam with respect to the diplomatic relations between India and Canada, more about the political in nature. I don't want to get into the angle about more
Sure.
about the political consequences and the developments that are taking place. Well, coming to the investing from Canadian funds to India, if you see, of course, the Canadian funds have been quite active investing in Indian markets from quite a long time. There are Canadian pension funds, Canadian sovereign funds, university funds, and also some kind of private foreign portfolio investors are quite active from Canada investing in India because of the growth prospects what India provides for the investors, the global investors, with respect to the long-term investment strategy is concerned. These funds are by and large the long-only funds investing in India for a longer-term horizon. So the current diplomatic logjam between the relationship between India and Canada, we need to pursue how this is going to escalate further. At this point of time, it is created some kind of turbulence with respect to the relationship between the both the countries in a diplomatic way. So the trade and the investment flow, these are the two important things. How it's going to evolve, we need to wait and watch, because these funds are by and large, the fund managers have invested in these in Indian markets for a longer term horizon. For example, just to share, Prem Vatsa, he their funds, they invest very actively in Indian market. They have strong stakes in companies like banking and other financial services also. So every fund managers have their investment strategy with respect to investing in Indian stocks are concerned. I don't think so, because of the current turbulence in the relationship between diplomatic relationship between India and Canada is going to create any kind of immediate fund flow going out of Indian market. I don't think so at this point of time. So how these matters, it can be negotiated with the India have a very strong external affairs ministry, and we conducted G20. India has emerged as one of the strong nation with respect to the global political
Sure.
scenario and diplomatic scenario is concerned.
Sure.
So we need to wait and watch how these escalations are going to be resolved over a period of time.
Sure.
So I don't think so. It's going to create any kind of fund flow going out of from these funds. I don't think so at this point of time. And I can say it is completely premature to say. Of course, they have huge stakes in Indian markets, but I don't think so it will create any kind of outflow with respect to the fund flow is concerned at this point of time. With respect to the investing is concerned, because with respect to investing strategy is concerned, the money flow always changes where growth is there more than the political standoff that comes in between this journey.
Understood. So it may not have an immediate impact because these funds do have a long-term vision when they invest in such companies. But let's actually talk about individual stocks where their holding exists. The Kotak Mahindra Bank, that's the biggest Indian stock bet for Canadian pension fund, and here the fund owns 2.68% stake, and the value of this is worth about 9,500 crore rupees. The other stock is Zomato, which comes at the second spot, where this fund owns 2.1% stake, and the value is worth about 2,050 odd crore rupees. Similarly, Delivery is the third one, which again is a new age company. Canadian fund owns about 6% stake here, which definitely fell to about 3.3% when the shares had hit a low in the early year. And then apart from this, there are several other stocks as well. We also have Paytm, where CPPIB was one of the anchor investors in Paytm as well, once India's largest IPO. Here, Canadian pension fund held about a 1.76% stake, which is valued at somewhere around 973 crores. Nykaa, Canadian pension fund, similar to Paytm, was an anchor investor. Here, it owns about 1.5% stake with a value of 625 crores. Indus Towers, that's another company which was earlier known as Bharti Infratel, where Canadian pension funds holds about 2.2% stake here, of worth about 1,085 crores. The two big heavyweight counters where CPPIB has an exposure is from the IT pack, Infosys, where it holds a stake which is worth about $21.7 million, and ICICI Bank, where the Canadian pension fund stake is worth nearly $10 million as well. Now, Mr. Patini, I want to understand from you, they have a variety of exposure, some to India's biggest, heaviest weighted stocks from banking and the IT space, the others largely in the new age listed space as well. How do you look at these particular set of stocks? Could there be an escalated impact if the tensions rise on these stocks?
Sakshi, thank you. You elaborated very well each stock wise. Just to add to your list, Piramal Enterprises also, they have the CDPQ, the fund have a significant exposure in their trust and in their funds are concerned, just to add to your list.
Sure.
So, and there are some individual portfolio investors quite active on Indian markets. So I don't think so. It's going to create any kind of a knee-jerk kind of reaction at this point of time due to this logjam at this point of time. In case any kind of further escalation that's going to escalate further, which is a complete bigger speculation at this point of time. In case that do happens, these are the big stakes in Indian markets. The stakes are more than are more than a couple of $billion stakes in these companies. So I don't think so. These stocks are the fund managers or the funds. They are not going to afford to sell in an open market. Probably if they realize that because of the political pressure or any kind of thing, they want to exit these stakes. Probably they will go through a negotiated deal. Probably. So I don't think so. It's going to create any kind of immediate sell-off in the market at this point of time. So we need to cross our fingers. So how these things are going to escalate.
Sure. Sure.
We should not ignore the fact they have a strong exposure to Indian markets, and Canadian funds have been quite active in Indian markets.
Okay. Let's shift focus out of the India-Canada tensions. We will circle back to them as in when we get more developments and more news flows. But let's also talk about the heaviest weighted counter right now, HDFC Bank, which is now down third day in a row. HDFC Bank has lost nearly 1 lakh crore rupees in market cap over the last 3 days, including today, the kind of fall that we are seeing. The big question is there more downside now, which I will come to you for. But first up, if you could help us understand, this reaction also follows HDFC Bank's analyst call that took place over the over Tuesday, and where they actually listed out some highlights where some negative surprises were given as far as the NIM squeeze that they could be anticipating, the impact on asset quality due to the merger, the cost of acquisition as well. All of this led to brokerage house Nomura downgrading HDFC Bank stock to neutral and also reducing its target price to about 1800 as well. There is a 17% drop due to accounting charges, a hit on NIMs due to excess liquidity, the drop in return on asset as well. These are some of the concerns that were brought about in the analyst meet. Help us understand, what did you make of the analyst meet decisions that were taken and announced, and what do you make of the brokerage houses downgrades now and the kind of reaction we are seeing on the stock?
Definitely, Sakshi. Sakshi, with respect to the commentary that came during this week is concerned on HDFC Bank, there is some kind of skittishness with respect to the short-term earnings of the company is concerned. Probably for the next couple of quarters we can take it into consideration. But whereas for the longer-term basis, we are quite optimistic with respect to the HDFC Bank prospects is concerned. Retail investors, nothing to worry about HDFC Bank at this point of time. In fact, the weakness in the stock, they can use the weakness to accumulate the stock in their portfolios for a medium to longer term basis, not for a short term perspective. And coming to the point when there is a significant merger that takes place between a largest NBFC and largest bank, so there will be some kind of impact on the NIMs in the medium to short term. It is pure a short term kind of thing, probably for next couple of quarters. I don't think so. It's not going to have any major impact on HDFC Bank prospects for a longer term basis. In fact, the same Nomura, once the dust settle down, they're definitely going to upgrade the stock once the current skittishness get discounted in the market. So for the matter of fact, for retail investors, use this. They can use the current weakness to accumulate this bank in their portfolios while the long-term investing is concerned.
Okay, can use these dips to accumulate this stock for long term, as HDFC Bank definitely remains one of the most fundamentally strong banking stocks that we have seen in the Indian stock markets. Has been a great wealth creator for decades, and with the merger also it's become a financial behemoth. These could be seen as initial hiccups that over the long term could get smoothed out too. Many thanks, Mr. Batini, for being with us on the show and discussing with us all these important points of concern for the markets and the strategies investors must follow. Great to have you with us on BTTV. Let's now shift focus to the markets again. 600 points lower on the Sensex right now, 66,199. The Nifty at 19,734, trying to stabilize itself with this kind of a fall, but still about 2.5 hours remaining. Remember, it's the weekly options expiry as well. So we'll continue to track the market movement for you and help you understand where exactly should you be keeping your focus on as far as the markets are concerned. But do stay tuned and get ready for our Market Masters series as well. On this series, market gurus reveal their investment strategies for a winning portfolio. So you can join us on the coming Monday, that's 25th of September, wherein Saurabh Mukherjee, founder and CEO of Marcellus Investment Managers, will join in, and you can understand his market insights and in-depth market analysis. You can also send us your queries that you'd like to point out to him on the number that's flashing on your screen, 730-308-0488, and your questions will be taken live. We have Prasad with us right now. Prasad Chala.